Welcome, everyone. Today, we're going to talk about and dive deep into something every e-commerce store owner should master, and that's tracking the right metrics to increase profitability. And understanding these metrics can be the difference between just getting by and truly thriving in your business. Whether you're just starting out or you've been in the game a while, this session will give you the insights you need to take your stores to financially perform on the next level. So let's jump right in. My name is Jacob Curtis. I am a CPA, a certified profit first professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes off of businesses and provides practical business advice that really helps e-commerce stores and Shopify stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, follow, subscribe, all of those good things. Let's start with gross profit margin. This is the first metric we should be tracking is gross profit margin. This is a fundamental metric that tells you how much money you're making after covering the cost of producing or sourcing your products. Now, this metric is crucial because it shows how efficiently you're managing your production or purchasing processes. For instance, if you notice your gross profit margin decreasing over time, it could be a sign that your costs are rising and you might need to reconsider and look at your pricing strategy or find more cost-effective suppliers. Next is customer acquisition cost, or CAC for short. This metric shows you how much you're spending to acquire each new customer. Understanding this is key to evaluating the effectiveness of your marketing efforts. For example, if your CAC is too high, you might need to tweak your marketing strategies or explore less expensive channels to attract new customers more cost-effectively. Number 3, average order value, or AOV, is another vital metric. It measures the average amount a customer spends each time they place an order, your average cart size. The higher this is, the more revenue you generate per transaction. For instance, by implementing cross-sell or upsell strategies, you can encourage customers to add more items to their cart, thereby increasing your AOV and overall profitability. Conversion rate is the percentage of visitors to your site who actually make a purchase. This metric is crucial because it tells you how effective your website and marketing strategies are at turning visitors into paying customers. For example, if your conversion rate is lower than you'd like, you might consider improving your site's speed, streamlining the checkout process, or optimizing different product pages to encourage more conversions. Number 5 is customer lifetime value, or CLV. This is a powerful metric that estimates the total revenue you can expect from a single customer over the course of their relationship with your business. Knowing this helps you make informed decisions about how much you can afford to spend on acquiring new customers. For example, by offering loyalty programs or incentives for repeat purchase can increase your CLV and in turn, your overall profitability. Number 6 is return on advertising spend, or your ROAS. This is a metric that tells you how much revenue you earn for every dollar you spend on advertising. This is a direct measure of your advertising effectiveness. For example, if your ROAS isn't high as you'd like it to be, you might need to adjust your ad creatives or refine your targeting or test new platforms or figure out your messaging to see if you can get that to a better, more profitable number, to get a better return on your dollars. Number 7 is your inventory turnover measurement. The inventory turnover measures how quickly your inventory is sold and replaced over a period of time. Now, this metric is essential for understanding how well you're managing your inventory. For example, a low turnover rate might indicate that you're way overstocked, which ties up cash and increases holding costs. Conversely, a high turnover rate could suggest inefficient inventory management, but also comes with the risk of stocking out and things like that. So balancing your inventory levels is key to maximizing your profitability. Number 8 is cart abandonment. This is a percentage of shoppers who add items to their cart, but then leave without completing the purchase. A high cart abandonment rate could signal problems with your checkout process. For instance, by offering free shipping, simplifying your checkout process, or sending reminder emails, you can reduce abandonment rates and increase your completed sales. Number 9 is the refund and return rate. This measures the percentage of products that are returned or refunded. High return rates can significantly impact your profitability and your customer satisfaction. For example, by providing clear product descriptions, accurate sizing information, and quality checks on the products, you can reduce return rates and keep your customers happy. which ultimately boosts your bottom line. Number 10, finally, let's talk about the operating expenses ratio, which is a ratio of your operating expenses compared to your revenue. This metric is important for keeping your costs under control and improving your overall profit margins. For instance, by regularly reviewing your expenses, you might find areas where you can cut costs, such as renegotiating supplier contracts or eliminating unnecessary subscriptions, which can, of course, lead to higher profitability and better margins. So to wrap up, we've covered the 10 metrics that you should be tracking to increase your profitability in your store. Each of these metrics plays a critical role in understanding and improving your business's financial health. By keeping a close eye on these numbers, you can make data-driven decisions that lead to greater profitability and long-term success. Make it a habit to review these metrics regularly, and you'll see a huge impact that they can have on your bottom line. If you have any questions about how to calculate these specifically, besides just doing a quick Google search, you can reach out to me. Or if you need assistance in just general managing your finances for your company and the bookkeeping and taxes and payroll is getting overwhelming, please don't hesitate to reach out. I'm here to help you piece together financial freedom. So schedule a call with me by scanning the QR code on the screen or go to jacobcurtiscpa.com/5-strategies-calendar to get started. And remember to follow me, Jacob Curtis CPA and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you soon.